Hi, Matt McAleer, Director of Equity Strategies at Cumberland Advisors, with a special update video that we filmed Tuesday, February 8th. This video is a peek inside our equity research using Dorsey Wright's analytics to try to identify stocks or sectors or indices that may have a favorable risk-reward pattern to them. Today, I get together with Ian Saunders of Dorsey Wright and dig deep into some short-term indicators and intermediate-term indicators that we try to use on a day-to-day basis in terms of managing allocations.
Great, Matt, and thank you very much for having me, and thank you for all those that are listening. So what we're looking at here is one of those near-term indicators that we have for that semiconductor subsector. There's a variety of different ways that we classify stocks. We have 40 different groups we put them into, and the semiconductors group is one of them. We're looking at about 60 stocks, 60 semi-stocks in that space. This is one of the near-term indicators that's really meant to looking at measuring how a stock has been doing over the past 5 weeks and whether the past week's worth of market action is improving or declining relative to the prior 5 weeks there. And so looking at this indicator, we can see it moves back and forth a fair amount, right? We see a fair amount of column reversals, but not that many get down into the territory that we were down into there at the end of January. This indicator fell from a chart level of 50% at the beginning of the year, dropped all the way down to a chart level of 6%. So just 6% of stocks are showing improvement over the past week relative to the prior 5 weeks. However, the beginning of this month did see it tick higher, actually, with Friday's movement, as Matt touched on, starting to see a little bit of a bottoming action from some of these semiconductors, starting to tick a little bit higher over the past week, and that led to a reversal higher from 6% up to that 14% chart level where it currently sits now.
And thanks, Ian. And something over the years that Dorsey Wright has always spoken about is anytime a weekly momentum chart or a couple charts we'll take a look at next falls under 20, it's time to start to at least think about offense. Now, the funny thing is, when you are in single digits, as you just said, Ian, in other words, only 6% of semiconductor stocks were showing positive momentum, just recently. When that's happening, emotionally as a trader, the last thing you want to think about is semiconductors. You've probably been beaten up a little bit, gun shy on a sector. So we are seeing some improvement here. One chart, as you often hear me say for our clients and so forth, if I'm bullish on a sector, I can find a bullish chart. If I'm bearish, I can find a bearish chart. So what I try to do is find multiple charts that are trying to tell us the same story. So what we looked at here is some improvement in the weekly momentum. What I'm going to bring up next, Ian, is the 10-week chart for semiconductors. The flip side is what we just looked at. We looked at weekly momentum. Let's look at the number of stocks that are trading above their 10-week average. And Ian, what are we looking at here, and how does this kind of go hand in hand with what we looked at from the weekly momentum?
Right, and so it's a similar kind of indicator. I mean, both of these are going to be looking at participation, right? How many semiconductor stocks are participating in an upwards or downwards move? Obviously, we saw both of these, including the 10-week, get down into pretty washed out territory, showing that only 2% of semiconductor stocks were trading above their 10-week or 50-day moving average. And I think that point you touched on there, looking at, there's a lot of different indicators you can look at, right? You can almost find anything to kind of to confirm what you're looking for. But when you start to see confirmation across the different indicators, when you start to see them reversing up at similar times, that's one of the points that we really look to touch on there. So we did see this 10-week for semiconductors, the TWSEMI chart, reverse back up into a column of X as early last week. It has pulled back a little bit there toward the end of last week, back down into a column of O's. But Matt, as we were talking about before jumping on this recording, a lot of times we'll see some of these near-term indicators move higher and then tick a little bit back lower before moving higher once again. And so that would be another point to keep an eye out here for. If you see this chart reverse back up into a column of X's, that's just further confirmation we're seeing that that near-term demand return to the semi space.
Sure, sure. And I had mentioned to you privately that I've found historically when a security or sector, as we're looking at here in semis, gets to a washed out area, in other words, only 2% of the stocks in the semi index were trading above their 10-week moving average just a few days back. Rallied up to 10%, pulled back to 4%. What I'm looking for here, if I want to be long semis, Ian, is a reversal back up, leaving us with a higher low at 4%. That powerful action of a jump, a move higher off of a washed out area, followed by almost a confirmation move from there. Those are two of the shorter terms. I did have one more chart to take a look at, and that is a bullish percent chart. And I'm going to, in a moment, have you just describe what we're looking at on that buy-sell indicator. This is can sometimes be a little bit confusing for clients or people that follow point and figure work. Why don't you explain to us what the bullish percent indicator is and where this fits in time frame wise versus the two shorter term indicators we just looked at?
Sure. Yeah. So the two prior indicators we are looking at, we're just looking at basically price averages over differing time frames. This chart is looking at whether a particular security is on what we call a buy signal or a sell signal. Specifically looking at, okay, what percentage of stocks in the semiconductor space are going to be on what we call point and figure buy signal. And all a buy signal is identifying is that the price level for a security broke above where it was unable to surpass previously. And that's going to generate a buy signal on a point and figure chart and adds to the further kind of confirmation and participation from that intermediate term perspective. And so we saw the chart here for the bullish percent for semis get down into pretty washed out territory, all the way down into the eighth percentile there. Actually, that's marking the lowest level we've seen for semiconductors since all the way back in the 2008-2009 timeframe. So even back in March of 2020 and late 2018, didn't see semis get all that washed out, at least down into these levels here. And so reversals higher from that heavily washed out, that heavily oversold territory, as you mentioned there, have historically at least been pretty decent buying opportunities.
Yeah, and we can glance over here, Ian. Let me just get a little extra room. Here we're taking a look at this 3 represents March, by the way, not to get too deep down the rabbit hole, but you can see in March of 20, which was into the teeth of the COVID pullback, you can see that semis only fell down to a level of 12, which what that's telling us is only 12% of the semi index was on a point and figure buy signal. Keep in mind, we're below that number just a week ago, just 2 weeks ago when we were discussing some of the washout we saw. You can see improvement. That does not mean we're just off to the races. This kind of chart can see some back and forth action, but what we want to at least acknowledge is that this sector got to areas that in the past, historically, have been a good buy. Can be for a trade or an investment. That's yet to be seen, right, Ian?
Certainly. As we've seen for many of these, I mean, just because an indicator is washed out doesn't mean it can't go lower, right?
Right.
That certainly played out over the past couple of years. But nonetheless, this is certainly at least adding to the positive picture for semis.
What I like to do for clients and what we've been trying to do the last couple of years is really talk about what can go right and what can go wrong in markets. That's one of the things we focus on. Where you can get stung, where you can get hurt in markets is when you start to ignore that other side of the trade. I say often in our meetings, in our trading meetings, understand the other side of the trade better than you know your own side, and have mapped out what can change your mind in a trade. So as ugly as things have been, we see some little cracks of sunlight in a sector that over the past 3, 4, 5 years has been a leader we'll keep our eye on it over the next couple of weeks. I really appreciate you coming on, Ian. Ian is with Dorsey Wright Associates, www.dorseywright.com. Tremendous company on the technical side of trading.
I hope everyone enjoyed that little peek into some of the work we're doing on a day-to-day basis. Thank you to Ian for joining us. What we'll try to do in the future is bring in other analysts to share some of their thoughts and ideas on how to position capital on a risk-reward basis. Remember, we're back at it Friday with our weekly trading video. Don't forget to like, comment, and subscribe, and we'll see you in a couple of days.